What's up everybody, Tom here with another video. Well, 24 hours on from the FOMC meeting and it seems like it didn't even happen. The stock market, at least the Nasdaq, is up hard. In this video, we'll be talking about technical analysis levels for the SP 500, Nasdaq, Bitcoin, Tesla, AMC, gold and more. Are things just heating up for the tech index? Stay tuned to find out more. Okay guys, well this begins our recap for the 17th of June 2021 in terms of the market close. And when you look at this heat map of the S&P 500 that we like to do on this channel, you can see the tale of two markets and the rotation that we've been discussing at play. Nvidia getting an upgrade yesterday, up 4.76% in the day. Phenomenal stuff. AMD went straight into our trend line. All of the technology sector doing very, very well. But the tale of two markets is there. Banks down hard, industrials down, and also energy. So it really wasn't everything up throughout the session. It was just the tech and the healthcare areas. Let's have a quick look here at the Nasdaq, up 1.29% on the day, strong. S&P 500 basically flat, actually ended up down 0.04%. Dow Jones and IWM, the Russell 2000, also both down. So market breadth obviously isn't there right now. If we think about a healthy market, usually you want a rising tide of everything moving up. In this case, it is a sector rotation of only very specific areas moving up. And you can see it here. Technology, healthcare, utilities, biotechnologies, and communications. They're the ones with real estate that are moving through the sessions. What's not doing well? Energy, financials, materials, and of course industrials. Those sectors were getting beaten down. And that's because these have been the best sectors over the last 3 to 4 months. This is a classic Wall Street rotation. And hopefully you guys have been following the channel. If you haven't, remember to subscribe because we've been discussing this now for months and months and months about how the rotations play out. And it's an integral part to your understanding of investment and of course trading in the stock markets and markets in general. Let's have a quick look now at the technical analysis. We'll get started with the dollar index. Of course, the big moves that happened yesterday. We got straight into this resistance of 91.40, which was the zone that we did think that we would get to after, whatever was going to happen with the FOMC. If it broke high, we thought we'd get to the 91.40. There was no waiting around for it. It barely even held there. And this shows the speed of the markets right now. Now, often markets will overextend, and I still think that this has gone a little bit too hard, too fast, and we'll probably have a decent pullback. I'd be looking at this 91.40 zone if it ever does come back down, because if it does, what's it going to hit? It's going to hit moving averages such as the 20 exponential moving average here on the 4 hour, and it should find a lot of buying pressure here, being previous resistance over on the left that will become support over on the right-hand side. It's big stuff there when we're talking about the dollar index. When we also discuss the dollar index, what else do we have to look at? Gold. And I think this makes sense as well when we look at the gold chart. Yesterday, we theorized that this was the next support zone for gold, and it's just hit it around that 1766 zone. Support previously, support previously, support previously. Why wouldn't it act after having this massive amount of fear coming out, at least trying to buy off this level? And that's what's occurring right now. If we scroll down into the smaller time frames, we look at the 2 hour, you can see a little bit of base formation appearing. You look at the 1 hour, again, you can see some base formation. And when we scroll down to the 15-minute, this is the type of thing that if you are going to capture the end of the downtrend, you're looking for. You're looking for this kind of base, basically a double bottom, followed by, let's hope, a confirmation close above, and then a little bit of a movement up. The problem with catching these types of things, though, is the trend is down at this stage, and if you do ever get a buy, what's going to happen? Well, it's only going to buy back to the previous level of support, which will now act as resistance. So 1806, 1810 is that zone. So be careful there with gold, but hopefully we see some bigger formation here on the daily, on the 4 hour, on those time frames. And as we do see that, we can start to put in position a base trade. At this point, for the shorters, I think it's kind of gone what it should. Does it go any further? It's always got potential to do so. But in my experience, when you get that many big sell-off days in a row, usually at a big key point of support, somewhere in this range here, we should start to structure up. It just makes a lot of sense when you're thinking about how big a move that really was. I mean, that's all the way from 1900 and 14, 15, all the way down to 1768 in a matter of days. That's a fast move no matter how we look at it when you're thinking about short offs. See how big this is? It's big in comparison to any of these big shorts, and look at the structure that often forms after those points. Just beware of this zone. Let's have a look at silver. Silver broke through the key level of support. I'd like it to come right back up here. This was a bit disappointing. You can see that volume spike that came through. As I said, silver is going to be dictated to by gold realistically. If gold starts turning around, silver will too. The only reason silver's holding a little bit better is because more people are buying physical coins right now. There is that retail short squeeze concept still going through the internet. That being said, I wouldn't really be looking at this until we get some recovery similar to gold. Look for lightning bolts on the smaller time frame and other things that we always talk about on this channel. Let's move over to US oil. So US oil really did come down. It actually did something we didn't like yesterday. Peak, trough, lower peak, lower trough. That sequence always has me worried. We're at the last point of really support before it turns around here. And I think it makes sense that this is going to happen here as well. When we think about the weekly, we mentioned this zone, we mentioned 72.80. We talked about how this actually caused a big sell-off last time. And I could see it having a decent sell-off here and then hopefully one last recovery to get back to that 75 area. But if it doesn't buy off this 50 exponential that we just saw on the 4 hour, that's what I'm thinking is going to happen. Very key for it today. Any further down, unfortunately, I could see it going all the way back down to these previous highs where it should be picked up by Wall Street. So just be careful here on oil. I do think that all of this easy trading where we've just been taking the 20 exponential moving average up, that's now over. And now we're just hoping that 50 can hold it for the session, but it doesn't look so good when we look at this on the chart. Right now, I'd have to say I'm neutral to negative on oil as a trade at this stage. That peak, trough, lower peak, lower trough, not looking too good. 72.90 also got hit, so close to the 75. And while I think it can get up here later on, it may be a few more weeks till we end up getting to that zone. Let's have a look at AMC now. AMC had an amazing close on it yesterday. Big $60 plus. That's huge for AMC. 4 hour looks super strong here. Let's have a look at the 2 hour. You can see it got boosted through early in the session, then just sat around. And if you actually took this, you'd notice it's basically a long leg doji. You've got the low, you've got the high, and you know that if we clean above this level through the Friday session, boom, $68. You know what I would also be thinking though, because we're going into the Friday session, we've seen this quite a few times, there's a good chance that people will paper hand it into Friday. So let's say throughout the Friday session, we see some bullishness, we get up to $68, $69. Do you think in the comments down below, people are going to hold it into the Friday close if it is at this price? I would have it at a guess that they'll probably sell off some of their profits they've made during the week, as a lot of people would have been purchasing it around this $52 zone throughout the last couple of days. I mean, this is probably a very good entry for a lot of people. Some people will have it here. Some people will be taking profit, I believe, at that level, should it be reached through the session. On GME, very similar kind of scenario, except it's still weakening. We look for the 240 plus close, and if it does happen, double bottom will be in. So we've got the low, and of course we have the peak. Good luck out there. We'll continue to watch GME on a daily basis, but at this stage, AMC is where the action is at. Moving over to Tesla, 616.60. So when compared to other hyper stocks, I got to say Tesla is incredibly disappointing, guys. You know, you look at Shopify yesterday, amazing technicals. That was up, 6%. Enphase up 6.56%. Square up 4.9%. Even TDOC coming along with 2.68%, and others doing really, really great throughout the session. So when you come over and you look at usually what was the big data, the one that moved for us, it's not doing it. 616 is a weak session day. Even though it's up 1.94, this thing has to start firing and firing soon. I'm still looking for the 635 break. I'm still seeing how it can deal with the 660 level in this trend line. And you know what? If it gets above the 666, then we're starting to see some real repair in the markets. But to put it in perspective, look at this chart, and then I'll show you another chart. Let me show you Shopify. Wow. Totally different scenario. Look how much better recovery this has. And it doesn't matter which one we look at. If we go on the Twitters, it's got great recovery through the trend line. If we go on Square, it's got great recovery through the trend line. This stock just isn't quite doing what it should be doing. It's finding support. Maybe this little bit of a trend line on the bottom we can use as buy pressure now. But yeah, once we clear through 620, we should be able to go to 635. If we get through there, 660, nothing has changed over the last couple of days. Good luck to Tesla holders. I hope we can begin to see the recovery come through. Let's now move over to the US 100, the Nasdaq, and boy, oh boy, were the bulls back in town yesterday. So on the futures, when we were doing the live session, we saw these wicks. And I guess we knew there was a battle between the bulls and the bears. If the bears had gotten it underneath 13,850 yesterday, where would they have pushed it? Back down here, back down to the previous resistances. But guess what? The bears did not regain control of the market. This was a classic case of Wall Street doing its thing, doing its rotation. New high was formed early in the session. It went straight up and did not even come back. This thing just went straight up and through and made all-time peaks. So when we go and have a look at it on the QQQ, look at that daily close, a very strong one, which should be followed up by a nice couple of bullish weeks. It's unlikely this is a false break now. You've got a breakout, a pullback, a new high. Unlikely that's false. Usually it isn't. Also, look at the volume that came in yesterday in the last 2 days of trade. Someone, let's call it Wall Street, has been purchasing in the QQQ. Check it out. That's big volume for a bullish day. So definitely the market is back on. The rotation is happening here. The breadth is coming out of the market, which is always a big concern. And it's just the same as last year. Technology running June, July. Then we had August. Then we had that weakness at the end of August into September. Will this year be the same? I've talked about how I think there's a second correction coming later on through this year. And this is making me think that's even more possible. But for now, Wall Street's piling in on healthcare and piling in on tech stocks. Will it continue? At this stage, it looks like it can. Let's have a look at the US 500 now. So a much weaker market. As we discussed, financials down, energy down, Caterpillar down. It's all down. And this just kind of hovered for the day on the 20 moving average. Nothing wrong with it sitting here, but certainly not the recovery we were seeing throughout the other sectors. If this starts firing and starts getting through as well, then we're still going towards the community trend line. And at this stage, we still are cautiously optimistic on the markets, purely just based on the fact that we're seeing the price action come through at this point. If you go and have a look at something like the US 30, the Dow, you'll notice here it's just nowhere near as strong on the charts. But realistically, this is due to things like Caterpillar, as I said before, where they're dipping over. Some of the financials aren't doing so well, and that's why the Dow is suffering. So it's a tale of two market rotations right now, and continue to think that. And once you start playing their game, then you can have a little bit more success in the markets, most likely. If we go and have a look at BTC to end up today, BTC shorts still out of control. You can see the whales just continuously pile into the Bitfinex BTC shorts chart here. They're pushing it all the way up to the 30,000 up here. And I'll say this, it's starting to work. This chart is right in the bottom of our zone. And you know what? I don't really like what I'm seeing here, guys. We've got a peak, we've got a trough, we've got a lower peak, we've got a lower trough. So if it doesn't pull off this 37.7, 37.6 area, which is previous resistances, you know what? The problem with this is that all of a sudden, Bitcoin's got nowhere to go but down here. So what's the next level of support? 35,000 after that. What's the next level of support after that? Probably 34 into 31. So if we're thinking about wick-off distribution or accumulation in this case, what usually happens? Comes up, goes down, spikes a new low, comes back up, springs, and then of course accumulates. I would like to see it hold this level. If it can't though, and it keeps moving down, just remember very key zones coming up for BTC. So if you're watching these, there's the areas. And if this does start to fall, it's going to further degrade the alt market. So what I mean by that is BTC is still the king dog right now. This is the king of the crypto markets. If BTC declines, every time it's doing so, you'll notice it's taking Ethereum, it's taking Cardano, it's taking every other alt lower. And that's because it needs to recover. Here we go, is a great example. Look where Ethereum is already, 2,300. If BTC falls under this level, what's going to happen to this? All of a sudden, we're going back down to potentially 2,000, if not lower, on Ethereum. And this is the degradation that happens in the alts as people lose faith in BTC. BTC has to drive the market. Once it drives, people move into the alts, people move into of course, the more speculative kind of ones, and then it continues to flow through. It's like the index. We need this one to keep holding up and to make new highs. So instead of going above 42,000 at this stage, it's putting the pressure on 37.6. Hopefully it holds. If it doesn't, I can see throughout the weekend, 35, 34, or a 31. Each one of those zones should be met by buyer demand. Good luck, everybody out there. Come join us 1.5 hours early before the New York Open session, and it's going to be an interesting day in the stock markets. Good work, everybody on the hyper stocks as well. Boy, oh boy, was it a sea of green yesterday. I hope you guys made some money. Bye for now.